Right, legends. So this is a quick teaching video on getting on board or an entry technique for trend continuation. Okay, so this sort of pattern, right? I mean, it does work in range band markets. So for example, if you're trading like a 1 minute, then it's like if you're playing a move, it's sort of a trend on a 1 minute. This is more for like when it breaks out or if it doesn't come to your level, because when we're in a range band market, we get the deep pullbacks we want, but when we're trending, we don't always, we just we let it pull back in continuation. So I'll give an example now. So if you remember from the live session we did, live trading session, so if you're watching it later on, weeks down the line or in the future sometime, this was on the 30th of January. So if you watch the New York live trading session, I broke this down and I said, what if we get on board? What if, how do we get on board in the middle of a move? Okay, and I marked this out. I said when it pumped this key level. So if we go over, what's this key level? You that we were looking for longs above this. So this was that weekly level. Okay, so this is more to do with trending market. So and I believe we're going to enter that phase if I'm correct. So I said once it clearly breaks this, then we're going to look for high probability buys because it's broken out of the range. Ideally, I was looking for a smash below here, but we didn't get that, but we got it here. Now then I said, okay, what do we do? Because sometimes, we look for the ideal buy at that level, but what if it comes off of that level? What if it came off of this level? We don't know. Okay, and this is the perfect example, and I'll show you this example and gold, and the rest is up to you to sort of find examples. So look, it came up. Ideally wanted this, it didn't. It came off of that. We didn't know that at the time. Okay, that later on. So then I said in the session, I said, okay, what we do is we mark our intraday ranges. Okay, and then for this, when it popped up, that's the high. So this is the day. Okay, if you split the days up, this way we pay attention. How does the candle look like? It's gonna be a bullish close. First high. I said, okay, at this point, do you know you're still waiting for a buy here? You're not sure. What if it continues? What do you want to see? Consolidation, then a breakout. Okay, so if it breaks out, look what we've got. We've got that high. So at this point, we're wondering, okay, what do we do here? So this is a pivot, like a consolidation here. If this is at this point we're saying okay, it could still come back down here. Okay, we're still looking for a possible buy down here, but if it doesn't, where do we get on board with a high probability long above here? Because then this becomes a deviation. Okay, so we need to let price unfold for that, and then we step and then we look. So okay, it's pushing down, pushing down, pushing down. Nope, it's broke back above. That becomes the deviation. What would be the entry there for continuation? Now in this case it didn't continue as much. Okay, it was a bit 17 points, but you got to remember it's already fulfilled a large daily range already. And for the other reason, for example, if you look at the euro USD dollar, may have been into resistance, so you would have got a bit onto that. And then what does the daily usually do? It usually pulls back then towards the end of the day. So with this you got to make sure once the daily range is fulfilled or most of it, then you got to be careful. Okay, so if this was happening earlier on in the day, we've still got more time in the day for it to expand. But if you look, it's getting later in the day towards the then for example here approaching 1650, that's London close, the probability is not high. But if it was in the session time early New York, okay, so what do you do then? So then you can say, well, okay, either closed it because it's approaching late in the day, or it's getting back within the range, I'll exit it, whatever reason. Then you say, okay, it could still come back into the key level. In this case, it still did not come down to the initial low. So let me do different colors for this so we don't get confused. Okay, so yeah, so if you look, so just imagine the top brown line as this SR level, Monday's high, and this is the key weekly level, okay, the bottom one. So in this case, when the next day starts, we're expecting bullishness, okay, bias, because it's broken the key level. We're still waiting for possible moving to here, but oh look, it hits that level. So what do we do then? The same levels that we're using pivots off of, okay, that can be used again. So what we do is we don't know if it is, we drag it into the next day, those exact same levels, they should not change. If they're pivots previous days, there's a good probability they'll pivot day after. So what we do in this case is we extend it, and then what we do, so we don't imagine this is not here. So at this point we're still waiting, and even if you bought it here with a wider stop just to make sure you got on board, okay, that worked. But sometimes it could go deeper. So if you want to ignore that, you wait, you wait, you wait. As soon as you start seeing it respect the levels, okay, it's respecting this now, new day. So this is the Asia low. This line delineates the day after. If you look, any move below here, okay, same level will be considered as a deviation. So when this happens, starts respecting that level, that says to you, okay, it's not going to hit this level. This was enough for it to continue. Still early in the day, we've got movement to go higher. And if you remember, we were bullish the Euro USD at the time, so we've got further upside. So what you then do is, this is the entry then. So, apologies. This is where you look to enter then. Because once it's done the deviation, it reclaims that level. Look what we've got. We've still got the bullish bias because we've broken out a key level. At the time, we were long Euro USD, bullish bias Euro. Dollar CAD was still holding up well. All the Euro crosses, we've reclaimed that level. We long it there. The risk is then that. So once it does that, that says to us, this level was enough for it to hinge off of and not that. So we continue higher. Okay, and then why did I say we're expecting a trend? Because we're expecting trend once it broke this level. If you look, consolidation leads to expansion, hence you got that move. Did that make sense? Whereas if this was a range bound environment, it wouldn't work because most likely come all the way back down. But because we're expecting trend, those same range levels, okay, we used in the next day once it's done its thing, and this would be the, if confirmation entry. Let's use the same thing on the lower time frame, okay? Resistance there, you can see is a pivot going forward. Resistance there using SR as confluence, okay? But at this point, you could say, well, what about there? What about there? But the moment you start respecting that, then it doesn't matter. Even if you pull back deeper, the low is in because it's starting to respect this. So at this point, you could have used this as an entry. You're wrong below low of the day. Imagine what the daily candle is looking like at the time. Okay, always keep an eye on the daily. So there's the daily open. It's done the wick. We're above the daily open. We're respecting not this key saw, but also this range level. Okay, if it's being used before, it's going to be used again. So at that stage, this will be considered as a deviation, and once it starts continuing, that's how you get on board in the middle of a move, and then you don't just sit there holding your leg saying, oh, I missed this. So again, just to reiterate, this is for trending markets, because if it was range bound, most likely it's going to come back down, but the higher time frame bias was expansion, and that's how you catch it. Make sense? I'll do another example now, okay? For gold. So I did a snippet video that same day for gold. Let's look at this now. So what did I say for gold? We were using this. It was late in the day, but you never know. I said, okay, we've done the deviation. It's come off the KSR level. Okay. At this point, okay, deviation, resistance, deviation. It's come back above. At least as a valid long. But what's holding us back? Time of day is late in the day. So probability of a continuation on late in the day is very low. So although the setup is valid, if this was early in the day, it's still got more time in the market to go. So that's fine. So I say if it gets back below, it's exited. So whether you exited it or not, it doesn't matter. They just come back down again. Same pattern. If it gets back above that level, we act as if this was a deviation. Let's look. Still key level. As soon as it gets back above, so one, you could have done it here. This would have considered as a deviation. Okay, because new day, new volume, expecting a bullish candle. If you didn't get on board here, because if you did this, then you say, okay, that was an anomaly or a deviation. As soon as it gets back above, continuation. Look again. That same level again. We've still got time in the time left in the day. Early, well, sort of. Okay, well here we did. And then the continuation. Where was the target objective? It wasn't big, but I let a day trade into this key level here. Okay, so this pattern wasn't wrong, but time of day. Okay, so late in the day. Okay, pullback time, profit taking time. So you wait for the next day. We're still expecting the bullish continuation because the dollar was very weak. Risk off. So this is going to push up. So if you didn't have the balls to get it here, you wait. And this is like a pattern to confirm the low of the day. You either did it there or as it broke more levels like this. Further probability. You could have got long there. You know that you're wrong there. Not big, but it's something. Okay. So days like this could have been huge or not, but you don't know. Okay. Did that make sense to everybody? This, like I said, this is ideal for trending markets, okay? Range bound markets, not as so because most likely come back right back into the range. But if it's trending, you look for any excuse to get on board, okay? So that's how you would do it. If you're not sure where the low is going to be, or if it's going to come to the SR level, you want it to, let it come off. And then once it starts respecting those same levels that they were respecting previous day, then you get that. So consolidation, deviation, valid long, and you're wrong if you come back below here. And that's why I said hard stop there. So you get, okay, get out. You know why? Late in the day. This is why you don't take trades late in the day. Okay, unless you're using a wide stop and But if you want a short-term trade, let it get back above. As soon as you start seeing respect, boom, you can get back in. Okay. confluence. So a bit of confluence. Okay, so we knew that this was going to be mainly by euro strength driven. Dollar cut as well, but euro strength. So if you want further confluence and not looking at this on its own, what was the low on this pullback was about 9 GMT. If you go to Euro USD, what the fuck's this? Um, what was the low in the euro? They came to support at the same time, sort of. Okay, and if you want to go further, what was the Euro Aussie? Where was Euro Aussie at 9 GMT? Well, Euro Aussie was finding support down here. Okay, that's what if you want to further support. Okay, to the idea, but on its own merit, that was valid. Okay, that's the so. This is a quick brief video on entry technique in a trending market in the middle of a move if you're unsure where the low is. Okay.